Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. Carol Massar, Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse the moments of the trading day. And Carol, we got a lot to catch people up on here because we started higher here on most of the major indices, but it's been a fade here as we've gotten late into the day.
Absolutely a fade. We're definitely off our best levels of the session when it comes to the equity trade. So stocks have pulled back off a little bit. We've seen yields move down. We've had Fed Chief Jay Powell on point today, reminding us that the economic recovery is still not enough to dial down when it comes to Fed stimulus. And so maybe we're seeing some of that play out. You know, when he says the economy isn't as strong, Tim, as maybe some people expect, that's a reminder that we're going to see some slow growth.
Yeah, it is. And he certainly was asked about everything that we've been talking about, housing prices going up, whether inflation is transitory or not. Asked about producer prices going up as well. And the message that we got in his prepared remarks, the Fed is staying the course. And look, the equity market and the bond market certainly saying, hey, that's okay with us.
Lumber, used cars,
Yeah.
You name it. Everything that we love to chew on here got brought up at that particular inquiry. Of course, there's more coming from Fed Chair Powell tomorrow, Taylor. And even more data coming in the rest of the week, the retail sales. But at the moment, when you look at that PPI, clearly the market is seeing inflation, but the market is responding more to a dovish Fed chair.
Yeah, perhaps maybe bringing forward some of those rate hike expectations as we were talking about earlier with the CPI data, but with yields falling on the long end, what does that mean sort of about the long-term economic, long-term inflationary expectations below 2%, Romaine?
Yeah, let's walk you through the numbers here because you got about half the stocks in the green, half the stocks in the red. That's providing a little bit of a mixed day here on Wall Street as we hear those closing bells. The Dow Jones Industrial Average right now is up by about 50 points. That's about 0.1%. The S&P 500 up by about 6 points. That's up by about 0.1%. The NASDAQ Composite right now is down in the red, down by about 0.2%. But we should point out the NASDAQ 100 is actually positive in the green. Looks like it's going to close higher by about 0.2%. And that's largely because of a lot of those big cap tech stocks, Netflix, Apple closing at a record high today. But the flip side of that, Carol, is, of course, what we saw with the Russell 2000 once again, and a lot of those small cap cyclicals, the Russell closing down on the day 1.6%.
Right. And I know we're going to get into sectors. We'll talk about the interest rate sensitive sectors because that certainly played out in the markets today, whether it was utilities or real estate. But then on the flip side, you've got American Airlines. I'll get into that in just a moment. But, you know, the CEO there coming out and being very optimistic about the industry. And so you really try to, you know, Taylor, put it all together.
At least the market's trying to put together where are we on this reflationary trade. For our radio audience, we're taking a look at the sector winners, the sector losers. It is about half green and half red. That's the good news. And it really has been the bond trade that is back in vogue. When bond yields are falling, it's technology that's up 2%. It's real estate, utilities that are up 1%. Those benefit, of course, when yields fall. We go down to the losers. And you have to say it's sort of that rotation out of some of the cyclicals. The worst performers, autos and energy, they're off anywhere from 2 to 3% on a sector level, Carol.
Right, but energy we know has been on a tear so far this year. So let's get to some of the gainers for today. Apple, let's start there, up 2.4%. Hitting another record high today. Bunch of Apple stories. Yesterday, we talked about Apple teaming up with Goldman for a buy now, pay later service. That's a big deal. And then you also had our Mark Gurman coming out and Apple talking about looking for an up to 20% increase in new iPhone output for 2021. That got the stock moving. Got to mention American Airlines. I mentioned it before. The company coming out and lifting its financial forecast ahead of results next week. And so that stock took off about 3%. Got to mention Moderna, which has also been on a tear. During the day, Moderna topping $100 billion market cap mark for the first time, stock ending up almost 5% on the day. Check out the Business Week cover story. It's all about kind of Act 2 for Moderna. Where does it take that messenger RNA technology?
Yeah, investors certainly have high expectations for that company. We got to talk Bank of America. The company reported earnings this morning. We just heard from CEO Brian Moynihan in an interview with David Weston just now. The company finishing the day down just about 2.5% and off of its lows earlier in the day after reporting earnings. It was down as much as 5.2%. It's a similar story that we saw in other banks. Customers are spending, but they're not borrowing, at least not right now. Loans and leases in consumer banking declined 12%. David Weston asked Moynihan about this. He said that he sees signs that loan growth is coming. Also keeping an eye on Peloton this afternoon, guys. Finishing the day down more than 5.4%. It was downgraded to neutral from outperform at Wedbush. Sees a risk of slower engagement in the aftermath of the COVID-19 pandemic reopening. And then I got to end with AMC, down more than 15% today.
Ouch.
It was very actively traded. Still up, though, more than 1,400% so far this year, Caroline.
The fizz coming out of that retail trade, AMC on the downside.
Yeah.
What's also on the downside, what's coming fizz out of the dollar. Of course, remember, dollar's been on a tear since back in May. You couldn't push it lower, but today we get a dovish Fed Chair Powell, and we go cross-asset to see the dollar index down by some 0.5%. Tell you what is rising strongly in the FX market, the New Zealand dollar, the Kiwi at 1.2%. Entirely the opposite coming from over there, because the central bank policy more hawkish, pulling back in terms of their stimulus. Certainly when it comes to quantitative easing, many feeling that there might be a rate hike coming on the agenda. We also saw the pound actually on the rise because inflation data came in stronger in the UK as well. This is a global inflation story. We're looking at commodities, though, actually on the downside. WTI crude up by 3.4%. Basically, the US is ramping up its supply just at the same time as demand perhaps not coming in as strong as many had anticipated. Inventories are building. Notably, also, the UAE might be cutting a deal with OPEC+, so maybe we could see production build there from OPEC as well. Brent down 2.7%. And lastly, I look at the New Zealand bonds, Taylor. Money coming well out of there as we see a more hawkish central bank, but quite the opposite in the US.
Bonds, money flooding into bonds, we should say here, with price higher and yield lower. And shame on us for not mentioning this earlier. We always do rate of change on the way up. Take a look at this. The rate of change on the way down. You're down 5, 6, 7 basis points with a 5-year below 80, a 10-year below 135, and a 30-year at a 197. And Carol, this really highlights the push-pull within the market. You have higher CPI, higher PPI. Main Street, in testimony to Powell, says we have inflation. Powell comes out and says, nope, it's still transitory. Don't worry.
It's like when you get a haircut and your mom, you feel like it looks good, and they pop the bubble. Your mom's like, not so great. So Jay Powell kind of doing that up on Capitol Hill. Let's get to that testimony, some of it, and where he talked about inflation. Here's Jay Powell, everyone.
Inflation has increased notably and will likely remain elevated in coming months before moderating. Inflation is being temporarily boosted by base effects as the sharp pandemic-related price increases from last spring drop out of the 12-month calculation.
All right, that, of course, is Fed Chief Jay Powell up before lawmakers today. We'll hear from him again tomorrow. Do I hear transitory? I mean, this is what we continue to hear from him. He is on point, and that is really, I think, safe to say, everybody, right? A message to investors and the markets. This is where we're going.
Yeah.
Fed's not going to change the policy, Romaine.
Yeah, the market doesn't believe them. And I think you see that
Why do you
reflected
say
right
that in
now
terms of
in a lot of the
yields?
pricing out there. Taylor, you ran through some of those numbers there in the bond market. I mean, this isn't a bond market that has given up on the growth story, but they've certainly given up on the idea that that growth isn't going to come with a bit of baggage. And I think what was more interesting about this testimony was all the anecdotal evidence that we heard out of some of these members of Congress about the small businesses, about some of the individual constituents who are feeling the inflation maybe in a stickier way than maybe what's reflected in some of the big headline data that the Fed looks at. And even the Beige Book data, which kind of got buried today because of the testimony, even you saw that evidence in there based on the surveys that the Fed does. So it'll be interesting to see what happens in a couple of weeks when the Fed meets, what that debate ends up being like, whether they're willing to stick by that data that says it is transitory, or they start looking at some of the anecdotal evidence and say, maybe we should be concerned.
Right. Some responded seeing it as transitory. That was what stuck out to me. I'm keeping an eye on wage growth, though, because that's something that isn't necessarily transitory. I mean, I saw the headline earlier today and the story that we have at BlackRock's Larry Fink, raising wages by 8%. That is
was
not
that why he complained about inflation, or was it something else?
Exactly.
It was separate
It's
from that.
BlackRock
But
inflation, right?
But the thing is the wage growth is not transitory, right? It's a good, and it's a good thing all around. To a certain extent, but as soon as people start getting paid more, well, they have to get the money, the companies have to get that money in order to pay people more.
And Tim, they are going to get paid more over at BlackRock, we understand. Some of the more junior people over there are going to get an 8% pay increase. That's important because, well, the June CPI ran at 5%. That data within the CPI number showing that wage inflation isn't there. We're actually seeing wages rising at a slower pace to prices.
And Carol, sorry to cut you off, Romaine, certainly going to be looking at not only the last interview we just had with Bank of America, but pushing forward another interview we have, at least here on TV, with Wells Fargo, Carol, about, well, do you get some of the loan demand? When does that return? What is the health of the consumer at this point?
Well, if they all got cash, what do they need loans for?
Exactly. They're so flush.
There's a wall of
Companies
cash out there
are
on sale.
flush too.
They have
all right.
Twix bars upstairs. Twix ice cream bars. How's that for employee
All right, so
retention?
I'm done. I'm going to go get one.
Yeah,
All
they're
right.
delicious.
All right, we're going to do it. That does it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on Bloomberg YouTube. We'll be back again tomorrow, same time, same place, everyone.